If it is in the band of say 14, we say right time, get into it. So when you are seeing your entire investment, also track this ratio, because that will give you an indication how much you should allocate now. You should increase the allocation or you should decrease it. Right now, the P is in the range of 22. So what should you do? Should you wait? Reduce the allocation maybe, because coming 3 months may be a turbulent time. There are a lot of happenings there that the market is anticipating. So reduce it, but don't stop it. And realize one thing, the macroeconomic environment has changed. The government policies are working well. Money is flowing in, and we are in a better position than China. So right time, whenever there is a downturn, start investing. Don't put it in your locker. Don't put it in idle investments. Bank savings to me is an idle investment. Don't put your money there. If you have to put your money, put your contingency fund and put the remaining in liquid mutual fund. A bank deposit may give you a return of say 8%. Post-tax, it comes down to 5, 30%, waived off. But a liquid mutual fund can give you a return of the same, but post-tax it will be a higher return to you. To go ahead, put your money in liquid mutual fund. Park your money. You can pull out the money in 1 day's time also. You can park it on Friday, pull it out on Monday. Think about these avenues. Learn about these avenues. Price to book value is also similar in line with the price to equity. So not spending much time on it. Market cap to GDP. Warren Buffett, everyone has heard, right? So Warren Buffett is I will say, best supporter. He only coined this, market cap to GDP. The Indian GDP, if you see in the nominal terms, is around 2 trillion, 2.067 approx. So market cap to GDP, what is the market capitalization? Market capitalization is nothing but the free float into the current market price of the stocks. How much it is proportional to GDP. If it is going above the percentage, that is, it is more than the GDP, market is heating up. Be warned. You can book some profit. If it is lower, it's in the range of 50 to 60, right time, get ahead and start investing. So these are some of the things. Another one is the dividend yield. That is the market price divided by the dividend received, right? So these are some of the indicators which you should go ahead, learn, and whenever you meet an advisor, you should question him that what factors should I look into? You are asking me to invest, but are these factors good enough to look into? What this factor suggests, tell me, I will invest. So
this is on Nifty or Sensex?
These are Sensex data points, right? These are indicative. These are no suggestions, right? I'll answer all your questions. When I speak of equity, there are some criterias. Do you blindly go by hearsay and invest in equity? Please don't. Even if you buy a shirt, you visit 3 shops. Buy a mobile, you visit 4 sites. But you buy equity on the phone. It's good, take it, we book it. No. Learn about the company, learn about the promoters. These are the checklists you should have in your mind. First, company with quality management. It is very important who runs the company. All these things can be there in the annual report of the company. You can download from the websites. You can get a hard copy if you are a shareholder. So look at the quality of the management. Look at the corporate governance. Look at their debt ratios. Look at the company which have a growth prospect. Think about it and then invest. Never invest on a company on hearsay. That's the first thing. If you have a research report, read it, understand it, invest it. Even if the company goes down by 5% as a knee jerk, you will still be comfortable. So learn, read, invest. This is a favorite slide of mine. Can we have a better return than savings bank account? Yes, we can. We can through the liquid mutual fund. And you will be astonished to know more and more investors are now parking their money more into the liquid mutual fund, which has got a good exit option, and also the returns are favorable than the bank rates.
Tax-free?
No, it's not tax-free. It's not tax-free. I'll answer all the questions, sir. Right? You are making money, you are building your corpus, but what is the end? Either you have to transfer it to someone or you have to consume it to yourself. People ask me a very simple question, when shall I book my profit? When shall I sell it? I always say, make a particular goal. If that goal is reached, book your profit. So every investment in your portfolio should be linked to some goal. I want to buy a car 5 years down the line. I will make investment of 20,000 per month as a maybe in a balance fund to reach that goal of buying that car. I reached that time. I bought the car. I liquid my investment. That's it. But how do you do it? You can't do it mentally. You can't do it verbally. You have to write it down. So there comes the most important thing that is known as financial planning. Everyone say, I am a financial planner. I can do a financial plan. But have you written down your financial goals and financial plan? How many have written? Even if I ask this question of 150 crowds, 2-3 hands, they have written it down. Write down your financial plan. If you have got to take away something from this conference, go back home and write a financial plan and the investment linked to that financial plan and goals. This is a wonderful thing. It's a tree which has got the fruits, the most rosy one, the most delicious one at the top. It's a risky one because when you climb the tree, low-hanging fruits come first. Less risk. But the higher that you climb, more risk, but it's also delicious. So you have to understand what risk-taking capabilities you have. Right? So as per that, you can also have to understand the tree is only in the front, but what goes inside are the roots. If the roots are stronger, the tree becomes healthier, the fruits become better. So the roots, the first thing you have to understand is budgeting. What is your income and what is your expenses? What is your net worth? Understand budgeting. From that budgeting, you save something. From that saving, you start investing. Once you start investing, you buy a car, you have a family, you protect them. You get some insurance. Mark my words, insurance is a risk protection instrument. It's not an investment instrument. For investment instruments, there are mutual funds, there are direct stocks, there are commodities to invest in, there are real estate. Insurance is a risk protection instrument. As rightly said, get a mediclaim, get a term insurance, protect it. Because you have created wealth, you need a protection. Once you have protected it, the next thing that comes, everyone desires a home. There also you get a mandatory insurance, right? But once you get that home, you start growing old, your capacities goes down, you start preparing of something known as a retirement planning also simultaneously. Many people today find that their retirement corpus is not sufficient to lead another 20 years of life. So prepare from now. Prepare from now how to lead a comfortable retirement life because inflation will eat away most of the returns. So be cautious, start planning for the retirement goal. And once you have done your financial planning, you have made all the right decisions, right time, it's time to become angels. It's a favorite word, becoming angels. But what about all your properties, all your gold, all your stuffs? What will you do with it? You have to give it to someone. Give. You are not taking it anywhere else. You have to give. How do you give? Either you write it down in a piece of paper, say this is my will, or get a professional will done. That's the most important thing. At the age of 70 also, or at the age of 35 also, if you have developed or if you are an HNI, get a will done. Because you never know when anything can strike. So the first thing, invest as per asset classes. Second, whenever you want to see that your investment is growing, try to do a balancing of the asset classes. Third, write down all the investment in a piece of paper, attach it with a particular goal. Third, when you have enjoyed your life to some extent, make a will. If you follow these 3 financial wisdom, you will never ever want to go to another investor conference because you know what to do. Sorry? It's a very simple thing. You invest. While investing, look at the asset allocation. Second, I always say balance the asset allocation. If one asset is outperforming, try to come back to your original asset allocation. So if you are there 1 lakh invested, so 50 in equity, 30 in fixed and 20 in gold. So if equity jumps to say 2 lakhs, it has grown to 2 lakhs, your 1 lakh investment. Now what should be your asset allocation? 1 lakh should be in equity. So sell off the remaining equity and come back to the other 2 asset classes because everything has a cycle. So if you can maintain this balance, you will definitely generate more wealth, right? So once you have wealth, what do? You build more wealth, you enjoy life, and also think of your future people, right? Descendants, right? So you protect them through insurance and transfer whatever you have through a will. So if you can follow these 3 simple things, no need for more investor conferences, right? Right balance? It should be there. Goals can be long-term or short-term. It's your choice. Use equity products more often to meet long-term goals. Try to beat inflation. And maintain a debt equity balance based on risk, age, and your environment. That is what is the market saying? What is your perception? So look at ratios, read. Product basket, it can be a huge basket. India today offers a lot of investment avenues. But one thing, before investing in any product, read it thoroughly and then invest. It's your hard-earned money. That's the last thing, will and estate planning. Do spend some time, at least once you go back, write a plan and do a will, because you never know when anything can strike you. So if it strikes you, your people, your family members have to run everywhere to know where you have kept it. I have got 3 insurance policies, but my wife knows only 2. Then you have to write it down so that it's your money, your protection can be benefit to her. So when I say what are the investment mantras, I have got 3. If you fail to plan, you are planning to fail. It's true. Everything needs a plan. Everything needs a goal. Time in the market is more important than timing in the market. That is, be in the market for a long time. Just don't keep it short. Never think equity, share market, or any kind of investments can double in 1 year's time, or it can give phenomenal return just like that. Market is efficient, it understands, it can never happen. Last, know what you own and know why you own it. Understand a product and then invest. Never invest blindly, never on a hearsay. Plan of action, very simple, 4 points. But before that, the ultimate stuff. When I was young, I thought that money was the most important thing in life. Now that I'm old, I know that it is the most important thing in life. And it's really sweeter than honey also. So start today by drafting a financial plan. Knowledge is age. Plan your retirement, draft a will. Right? Thank you.
Thank you so much, sir. That sounded more like 25 years of experience in about 20 minutes. May I now call upon Ms. Sandhya Dhar to please present a token of appreciation to a respected speaker. With all the times you kept mentioning the will, I can only wish if I could be a beneficiary of your will.
Okay, just a thing. So any question that we have, we will take during the Q&A. And I'm also will be there during the later part of the show, so you can ask me, right? And for any kind of data points that you look for, go to BSE for the data points that I have shown. Go to BSE, NSE sites. We also have our own apps, so you will get all the data there. So you can download it, it's free. You can download the BSE, NSE apps also, it's also good. So look for data points from authentic sources, right? Thank you.
Thank you again, sir. Ladies and gentlemen, I would just like to clarify once again. You're a very enthusiastic audience, so your questions, just hold them till the last session. We go ahead and fill in the question slips that have been distributed already. You can even fill in multiple questions. We'll try and take forward as many questions as we can. The ones that we cannot address today, we will address on our website. So we're just trying to make sure that we have enough time left for the Q&A, as well as giving you out enough knowledge. So kindly hold your questions till the last session. Great. So our next speaker hails from the financial capital of the country. His name is Mr. V. Balasubramaniam, who is the Chief Business Officer at BSE. Mr. Balasubramaniam is the Chief Business Officer and is currently in charge of markets business of BSE. He is also in charge of all the new initiatives planned by BSE, including the setting up of commodities market and the international exchanges in GIFT City. He is part of the Executive Management Committee, which oversees the day-to-day functioning of the exchange, and is a board member at the Central Depository Services of India Limited, BSE Institute Limited, BSE Samman Limited, India's first CSR exchange, and Futures Industry Association Asia. He has close to 25 years of experience in capital markets and exchange industry, and was also part of the core team involved in setting up the National Stock Exchange of India as its first professional team member, and was instrumental in setting up the capital market segment, creating the Nifty 50 index, setting up the NCFM, the first certification program in stock markets and equity derivatives segment amongst others. Sir, we would like to welcome you, please. Thank you again, sir. Ladies and gentlemen, I would just like to clarify once again. You're a very enthusiastic audience, so your questions, just hold them till the last session. We go ahead and fill in the question slips that have been distributed already. You can even fill in multiple questions. We'll try and take forward as many questions as we can. The ones that we cannot address today, we will address on our website. So we're just trying to make sure that we have enough time left for the Q&A, as well as giving you out enough knowledge. So kindly hold your questions till the last session. Great. So our next speaker hails from the financial capital of the country. His name is Mr. V. Balasubramaniam, who is the Chief Business Officer at BSE. Mr. Balasubramaniam is the Chief Business Officer and is currently in charge of markets business of BSE. He is also in charge of all the new initiatives planned by BSE, including the setting up of commodities market and the international exchanges in GIFT City. He is part of the Executive Management Committee, which oversees the day-to-day functioning of the exchange, and is a board member at the Central Depository Services of India Limited, BSE Institute Limited, BSE Samman Limited, India's first CSR exchange, and Futures Industry Association Asia. He has close to 25 years of experience in capital markets and exchange industry, and was also part of the core team involved in setting up the National Stock Exchange of India as its first professional team member, and was instrumental in setting up the capital market segment, creating the Nifty 50 index, setting up the NCFM, the first certification program in stock markets and equity derivatives segment amongst others. Sir, we would like to welcome you, please.